The next presentation is Strandline Resources, and presenting will be Luke Graham, the Managing Director and CEO. He's got a diverse skill set that he brings to Strandline as an engineer by professional, but he's worked extensively through major mine development, port development, design, construction and operations through a really wide range of commodities in the sector. So welcome to the stage, Luke.
Yeah, thank you, Tim. Good afternoon, everyone. We're up. So this is the first time that Strandline has had a chance to present at Diggers and Dealers, and what an exciting time it is for the company, also our stakeholders, but particularly our shareholders. Strandline is on the cusp of production, so we're on the home straight. Production is forecast to be next quarter, so the December quarter, and that's of our 100% owned world-scale Coburn Mineral Sands project in WA, just north of Geraldton, about 250 kilometres north of Geraldton. Construction is at 85% complete. We announced that today. So just prior to Christmas, we expect to be selling our first shipment of HMC, so heavy mineral concentrate, which will contain the zircon, the titanium and the rare earth mineral called monazite. And if we're ahead of schedule, as we're planning, we might even sell 2, possibly 3 each shipment, assuming it's about 10,000 tonnes of shipments worth about $10 million in this market. Right now, the mineral sands market is booming. So it's there's a real supply deficit, just like a lot of commodities that have been speaking over the last few companies that have been speaking over the last few days. But mineral sands has got a fantastic macro, and prices are about 35 to 40% above what we announced in our DFS 2 years ago. So timing is everything, they say in business, and it's fantastic timing for Strandline Resources. So Coburn Project is what I really want to focus on today. As I said, it's a 100% owned strategic asset in the mineral sands space. It's got the banking case is about 22 and a half years of reserves, but there's a long strike further to the north. There's another 15 to 17 years of production targets underpinned by mineral resources. It's a strategic asset for a junior company to own Coburn 100% and going into development is a fantastic achievement for Strandline. And even though I will be mainly talking about Coburn today, it's important to note that Coburn is really just the start for the company. We have a massive organic growth pipeline, also 100% owned. That's down the coastline of Tanzania, mineral sands assets, and also Coburn in its own right is expanded quite significantly once in production. Because we're new to Diggers, we'll just go through the corporate snapshot pretty early. You can see that we're about a 500 million market cap, quite a few shares on issue, 1.2 billion, something like that. When I joined the company 5 years ago, just earlier 5 years, we were a 10 to 15 million market cap, and over that time we've been doing a lot of feasibility study, a lot of exploration work, and just de-risking the development for Coburn. Off-taking, execution strategy, refinement, placing contracts, all those sort of things, and you really love it when the plan comes together and we're in production, or in construction now, and things have really gone to plan. Our major shareholders, Tembo Capital, 18.5%, but we have institution investors up to about 60% of our register. A lot of them Australian-based, specialist mining funds, also some super funds there involved in us. Our liquidity is pretty good as well for a mineral sands company. Before I get into our projects in a deep dive, we'll talk about the mineral sands market. So I don't think anyone else from the mineral sands sector has been presenting at Diggers over the last few days. So it is critical minerals, and we are talking zircon, titanium, and the rare earth minerals for the monazite, which we get credits for when we sell some of the concentrate. So it is the products used in everyday life. They're critical to the major and emerging economies going forward. It's a very mature sector, so it's not like lithium in where it's really come in this last decade. It's been around for many years. The majors are Iluka, Rio Tinto and Tronox. They dominate production, about 70% of production, but there's been a massive lack of investment over the last decade, in particular in this sector. And not only that, those majors don't have the growth projects like they did a few decades ago. So that's created a really good opportunity for Strandline Resources to come in and get our project funded. And we haven't just got it funded, we've got an awesome funding package, which I'll take you through shortly, which really sets us up, and particularly our shareholders, up for success over this journey. As I said, they're used in everyday life. So titanium, the biggest end use is in pigment production. So paint, paper, inks, plastic. So when people are painting their houses, that really drives the demand. So global growth is really where these critical minerals are linked to in terms of demand. Right now, you can see this graph. It's actually, it's what TZMI, who are the industry intelligence experts, I guess, for mineral sands and have been for decades. They put this out at the end of 2020, and this is whilst we've been building this project, essentially this is the macro, or this is the supply deficit that's emerged, and prices have just been gradually getting increase since we did that DFS. So now about, as I said, 35 to 40% above our DFS. Here's our NPVs that were done 2 years ago based on those previous price decks. So Coburn is obviously our flagship project. That's the one that's coming into production. If we apply today's price deck to that in our model, every 10% of price increase, so this is a bit of sensitivity, every 10% of price increase adds about over 150 million to that NPV. So right now, at a 40% increase, you're looking 600 million to that NPV. So just Coburn alone is over $1 billion, and we're applying an 8% discount rate to that. So we've got $1 billion asset, essentially, from an NPV and some, that is about to come into production. So pretty awesome. We're well covered. The price targets on this company are significantly higher than where we are now, over 2 times. So there's an opportunity for investors and the like. So let's have a bit of a deep dive into Coburn Project. We are the next major mineral sands project globally coming online. There's not much else following us. In fact, Limited is following us right now. I don't know of any major project that's in construction right now. Here it is, another closer up image of the wet concentration plant, and I'll take you through the stages of this project shortly. When we're in steady state production, based on our DFS numbers previously, we're looking at over 100 million EBITDA for the next 30, 40 years. You apply those spot pricing today and it's close to 150, 160 million EBITDA on average each year. So what a foundation for Strandline to go into those types of cash flows. That will put us, this project puts us in the best quartile from assuming we deliver on our DFS assumptions and some, so puts us in the best quartile in this sector. We have pre-sold all our product for essentially the first 5 years of production, and that's not just to anyone, it's actually to the world's largest consumers, and we're selling 80% in revenue terms to Europe and America, and 20% into Asia, and that's in particular China. So it's a real differentiator, that diversity across the globe, and I'll take you through a little bit, give you a snapshot of our offtakes and what they look like. And we're already studying the demand behind this project and behind this company from our offtakers, the end users, and they are binding take-or-pay agreements, and they're arm's length where we maximise the value of our mineral. Those off-takers are asking already, and we haven't even put a ton on the ground yet, how we're going to can we expand it? We're in this tier 1 jurisdiction of WA, and we're getting a premium sort of request from the market to expand. There's a real shortage. There's concerns over sovereign risk in Africa and different parts, and particularly South Africa where Rio Tinto is, and also Mozambique where there's some major mines there. So any further supply disruption and Strandline is really well to capitalise. This is the processing. Okay, so it's a massive ore body. It's a 25-kilometre strike. It's about 3 kilometres wide. The ore on the eastern flank of it starts at surface and it goes about 50 metres thick. And we just progressively, with dozer mining units and dozer push, it's free flowing sand, it's really dry, so limited slimes, it's probably one of the lowest slime deposits in the world, about 2.5%. We don't even have to deslime the mineral, the sand, before it hits the first stage of the rougher circuit. It's really awesome. It's a coarse grain as well, so that really aids to the separation through the gravity separation. There's no toxic elements that go into this particular separation process. And we progressively backfill the mine as we're moving from north to south in our case. So we're really closing the mine progressively. We rehabilitate, we reseed it. You don't know the difference. We recontour it back to the original landform. So from an environmental perspective, it's one of the best mining methods there's going around. So, and Iluka had a lot of success in that, doing that over the years. So December quarter, we'll bring in the wet concentration plant. We've already started commissioning it. First stage commissioning. We'll go into second stage commissioning at the end of August. We'll put some HMC. We'll sell those few shipments which are in under binding offtake, as I mentioned, prior to Christmas, hopefully. And then we build up enough stockpile to put it through the mineral separation plant. Everything we're doing is conventional. It's been done before, but we are adopting from the outset the latest, most efficient, most innovative technology that's been, I guess, proven concepts, but it's the new generation of that. This is going to be one of the most efficient mineral sands mines around the world. And we haven't compromised on quality of equipment. Even though we're a junior, you think about that, we are using the best equipment that you could possibly use in this application in mineral sands. This is an image of we're adopting, being a new company, we've able to really get on the path of this work that's been happening for the renewables in the mining sector. We've got 11 megawatt solar. It's already there. It's ready to go. It's already been commissioned. That gets integrated with a 4 megawatt battery BESS system, which then we've got an 18 megawatts of LNG. So high efficiency LNG engines. We get a lot of sun. Up in Shark Bay, we get a lot of wind as well. Not as much as we have here today in Kalgoorlie, but it's a pretty awesome region in terms of the natural resources for renewables. We'll bring in 2 wind turbines. It's already contracted. Probably once we get up into steady state and things settle down, we're already contracted with Specific Energy. Now, they've done an awesome job to get this. And they've been heroes on our site, and they're just bringing it home now and getting ready for our first production. We've already started our dozer pre-stripping. We mobilised our mining contractor 2 months early than originally planned. We are targeting an early completion. Let's see how we go. There's a lot of, as you can imagine, coming into commissioning, there's still a lot of risk factors out there. We're well and truly aware of them through those ramp-ups, but nothing we're doing has been not done before, and we're well planned. The dozer mining units from Pearson, Tini and Sund, very proven technologies there. They've already been dragged in from that position there into just at the top of where the pit will go. So, and you can sort of see the mining pre-strip happening in the background on that image. That was 2 weeks ago, so I'm looking forward to getting up there next week to have a look firsthand at how deep they've started to go. This is our off-take strategy. I said 80% is sold to Europe and America customers. These are the biggest household names in the mineral sands sector. You guys may not have known them, but the first 3 there on the list there, Industry Batossi, Chilchers Materials, Mario Plato. We've got the largest ceramics consumer, Industry Batossi, typically an Iluka customer. They are on board for 50%. We then sell it, and they're in the Tuscany region of Italy. Looking forward to getting over there to celebrate that first shipment. And then we've got Chilchers and Mario Plato in Valencia. We're selling 100% of our chloride ilmenite into the largest titanium pigment producer in the world, New York Stock Exchange listed Chemours company. Venator is also New York Stock Exchange company. They are taking our rutile. They'll go into TiO2 pigment, as I said before. And then whatever doesn't efficiently report into those final product streams will go into this zircon concentrate. So the rare earth mineral will also go in there, and we get credits for that, and the titanium that goes in that concentrate as well. And that's to a Shanghai-listed stock exchange company. The funding, and just to wrap up really, and I'm not going to get a chance to talk about the Tanzanian growth and that organic pipeline, but it's a business in itself before I finish up, and the massive organic growth under that, and our customers want us to get moving into this next project as well. But really, to get Coburn and to own it 100% and come into production right now, one of the key enablers for this project was the Northern Australian Infrastructure Facility. We front-ended them in the whole financing process. They got behind us, and then we put a bond next to it, and then I guess the shareholders then came in behind that. So we de-risked the financing, and they've been fantastic. There's a long tenor debt in that solution. So credit to those guys, and thank you very much for the NAIF to support such a strategic asset and Strandline Resources going forward. So just to wrap up, and 15 minutes is just up. So we feel with this supply demand, we're in the right commodities, critical minerals. It's just we can't see it really changing. It is supply-driven macro that we are seeing. We've got the right assets. We're in the right place. So Africa's also, between Australia and Africa, about 80% of production comes out of those two continents. And that east coast of Africa, where Tanzania is strategically located, that east corridor, east coast from Mozambique, Kenya, South Africa and Madagascar, about 35% of production comes from that region. So we're strategically located. We've got, being a new company, we're able to get right at the forefront of our ESG initiatives with that renewables, with our new, with our relationships with the Nanda people up there in Shark Bay, and also the Mulgana people. That's just building and building. So that's fantastic, and we have a fantastic team also, and it's a big shout out to those guys to be able to deliver this project in this environment on time and on budget. Is a huge credit to the Strandline Resources team, and potentially coming in a little bit earlier than originally planned. So thank you very much, diggers and dealers. Canaccord, I really appreciate the opportunity to talk.
Thanks, Luke. We'll keep moving just because we're bang on time and we're into the last presentation of the whole conference.